Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Today is Wednesday, June 5th, 2024. Notably, volume was very light today. Gareth Solway on his show, I believe for the past few days, has been saying the same thing. It's something I kind of left out, but is very important. When you have very light volume, it means that the professionals and institutions are sitting on their hands. They're all waiting for what I'm waiting for myself, the unemployment data to come out on Friday before anyone can take anything very seriously. I think part of the lightening of the volume does have to do with seasonality of professionals trading less in the summer in general, which is what sell in May and go away is all about. But I think it might have more to do with what's going on. But he said with unemployment coming out Friday. But he also said that the volume was like so light that that's the kind of volume you expect on a half day or a hangover day, like after a long weekend, and just nobody's trading apparently right now. So that's notable and interesting. Combine that with all-time highs in the S&P 500. That's with light volume, you need to take that with a huge grain of salt. There's not lots of strength in the stock market right now. In order for there to be strength, you need to have more volume. You have to have more people involved. Like he said, and like I'm suspecting, that a lot of the bigger players out there are selling into this strength. I mean, with PE ratios being so high, with so many stocks having so much speculative value priced in other words, these companies are supposedly worth these prices that you would never pay for if you were like a serious businessman, like buying a store. Like, you consider, how much does the store make? How much should I pay for it? And, it's out of control what a lot of businesses are priced at right now. Warren Buffett himself has never been more bearish with his current positioning with cash. These are all signs to me that, crystal ball wise, like I say, again, here we are, a new high in the S&P 500. I'm going to say it again, and I'm going to say it again tomorrow too if it goes higher. I think that we're at an all-time high. I think we're at the top, and I think we're turning over from here, but we'll see. I'll add to that. It's I guess I'm lucky I've only been doing this show for a few months. I don't know what I would have said a year ago. If I'd be, it's funny, like Stephen Van Meter at this point for the past 4 years has been very bearish on the stock market in general, and it's just gone up and up and up and up. They call that being a perma bear, permanently bearish no matter what. I hope I don't turn into that, but with that we'll also see. Taking a look at the economic data coming out today, ISM services. So are we looking at service industries growing or shrinking? So last month there was a little shrinkage. We expected 50.7% reading for the month of May, and the actual was 53.8, so quite a bit stronger than what the market expected. So the market was actually expecting a little weakness here. Normally you see more strength going into the summer, I believe, because there's services do well in the summer. More people are traveling, visiting family, going out, vacationing. So services typically go up in the summer, and so I just see it as like, I don't see this as a huge eventful number. Again, it's Friday. It's all about Friday. But onto the rest of the data for now. The ADP employment was actually quite a bit weaker than expected. So the last reading of this 188,000 jobs expected 175,000, and the actual 152 2,000, and then we have the flash services PMI coming out flat. So expected and last were 54.8, and it came out exactly 54.8. Again, Friday is the real kicker. That's when the volume is going to come in. That's when the truth comes out as to where are we headed here. So, in all likeliness, the most likely scenario is that it's going to come in as expected, completely flat. I think that that's going to scare market participants. I think with the prices of stocks right now being so overvalued, in order for the prices to make sense, we need the cuts. We need, actually, ironically, we need jobs to be stronger, and we need inflation to be going down, and it's just, I don't know. I don't see this working out to anyone's favor for stocks moving ahead here. And again, it's like, if there is a Goldilocks scenario, well, what is it exactly? This is really the essential question that we have to ask ourselves. Now to answer the most unessential question, the pricing of stocks today on super low volume. We have an all-time high. We have an all-time high in the S&P 500. And I would take this with a huge grain of salt. This isn't the kind of thing, with the low volume, this isn't like a breakout that's like a tradable thing. The professional traders aren't seeing this and saying, "Oh yeah, time to go long again, time to buy this up and keep it going, pedal to the metal." It's not happening here. More likely scenario, this is a fake out, not a breakout. A breakout is when you have a pattern and it breaks out of the pattern, and then the probability of hitting its target plays out. A fake out is when it looks like that's happening, but it's not actually happening. While we're looking at charts, I wanted to bring up a chart that Gareth Soloway brought up on his Trading the Close show today. I think I showed this before. This is a weekly, each candle being 1 week of the S&P 500. And if you connect to the top of the end of 2021 to right now, it connects exactly to the very top of 2007, the Great Financial Crisis. And so this is likely to at least produce a little bit of resistance, but it also can potentially function as a top here. And again, I'm just going to repeat this ad infinitum, with valuations being what they are. No serious businessman would be buying businesses at these valuations. He'd laugh. He'd be like, "What? You want that much for that store? Are you cuckoo? Are you crazy?" I mean, that's how it works. That's one important perspective that I got from Graham's security analysis, is just driving that point in, that as a stockholder, that's what you're doing. You're purchasing a business. You're not gambling. You're not buying these gambling chips that like other people might want. Like, it's not like that. These are real assets. This is your share of a company, is your actual ownership of that company. It's very hard for a lot of people to really comprehend that, but that is the truth. That is the reality, and it's important to try to understand that. I'm curious if the low volume in stocks includes the bond market. I don't know if it is or not. Please comment below if you know better. And so because of that fact, maybe this breakout on yields in the 30-year Treasury yield, maybe this is also a fake out here. I mean, it's a very, very strong move breaking through this trend line. It's more obvious in the TLT chart, but one thing I wanted to just add today was that I haven't talked about in a while, that I pointed out before this finished the right shoulder and the breakout. I had noted previously, and I'm going to note again, head and shoulders here. Shoulder, head there, very clear. This is a solid head and shoulders plan. It has a up. Did I say plan? Pattern. All right, so the neckline is inclining. Check. The shoulder is clear. We have a very clear neckline. All right, check. We have a well-sized and curvy shoulder. We have a well-sized curvy head, and it's fairly symmetrical. This is one of these patterns that, as far as crystal ball reading goes, in the world of pattern reading, it's playing out very nicely, very, very methodically, not crazily. This isn't like far-fetched. Like this has the higher probability of playing out. But again, with the lighter volume here, maybe this is also a fake out. We'll see. It's all about Friday. It's all about Friday and the following Monday. You have to see a little bit of follow through. You got to see what the pros do immediately, and then how the market digests it over the weekend. And so, yeah, the Friday and the Monday are essential. I noted yesterday we dropped significantly from neutral and 51 down to, I think it was 41, 52 to 41, something like that, and we bounced right back up into neutral. And so I'm back to my idea that maybe 50 really is still acting like a magnet here, drawing it in until Friday again. Friday. Taking a look at the TLT, it's this trend line and neckline for the head and shoulders pattern. It's nice to see it upside down. It helps you, visually, it can help support how you see it. It looks a little different, to the eyes, but anyway, so very clear breakout in this fund. Again, I don't know about how the volume's affecting that. SMH, all-time high. As much as I make fun of this market and say how much crazy, like manic mania speculative value is being priced into these semiconductors right now, at the end of the day, again, like Graham always says, the market is not a weighing machine, it is a voting machine. And if you know anything about history, voters don't always get it right. Consider 1927 to 1929. Even the professionals. I've been coming across articles recently talking about how in 1929, before the Great Crash, like there was this article that came out saying something about how everyone should be rich, and that it's just someone was predicting like 30% gains every year for the next 10 years. This was right before the huge crash in markets in 1929 that started the Great Depression and did not recover real purchasing power value, I believe, for like 30 or 40 years. If you were invested at that time, you got to be careful when things get overpriced. Again, in the dot-com bubble, very obvious to anyone that like understands how this really works, And then, again in 2007, but I digress. That's all for today. Hope you enjoyed. Thank you for watching. Robschild.